Welcome to Crypto Insights, your go-to source for deep dives into the world of crypto. In today's video, we're going to answer the big question: what is Bitcoin? And more importantly, why is Bitcoin's price so high right now? Whether you're totally new to crypto or already invested, stick around. By the end, you'll understand the fundamentals behind Bitcoin's rise. But first, a quick disclaimer. All content on this channel is for educational and informational purposes only. Nothing here is financial or investment advice. Always do your own research and consult professionals before making financial decisions. Let's start with the basics. Bitcoin, often abbreviated BTC, is a decentralized digital currency. Unlike traditional money issued by governments or central banks, Bitcoin operates on a peer-to-peer network. That means people can send and receive Bitcoin directly without needing a bank or middleman. Each transaction is recorded on a public ledger called the blockchain, which is maintained by many computers, nodes, around the world. This makes it transparent and tamper-resistant. Bitcoin was introduced in 2008 by an individual or group using the pseudonym Satoshi Nakamoto. One of its defining features, scarcity. Only 21 million total Bitcoins will ever exist. That cap is built into Bitcoin's code. Because of scarcity and the system of rules, like halving, to be discussed later, Bitcoin is often compared to digital gold. Now that we know what Bitcoin is, let's explore why its price is so high and rising. There's no single magic reason for Bitcoin's high price. It's the result of multiple forces combining. Let's break down the main drivers. Bitcoin's fixed supply, 21 million max, means that if demand increases, price tends to go up. There's no unlimited printing. Add to that the fact that many Bitcoins are held long-term, hodlers, and don't move. That reduces the available circulating supply even further. Bitcoin uses a process called halving roughly every 4 years. At each halving, the reward miners receive for validating transactions is cut in half. That slows new supply. With fewer new coins entering the market, if demand remains the same or grows, the price pressure is upward. Lately, institutional investors, hedge funds, corporations, endowments, have entered the Bitcoin space. Their large purchases exert significant influence on price. Also, in many countries, Bitcoin ETFs, exchange-traded funds, have been approved. These let traditional investors get exposure to Bitcoin more easily, increasing demand further. Bitcoin is sometimes seen as a hedge against inflation or currency debasement. When traditional currencies lose purchasing power, some investors turn to assets like Bitcoin. Likewise, central bank rate policies matter. If rates are low or inflation is high, risk assets like Bitcoin become more attractive versus holding low-yield cash. Crypto markets are strongly driven by sentiment. News, social media hype, large trades, and momentum cycles tend to amplify price moves. Because Bitcoin is very liquid and globally traded, it reacts quickly to positive or negative headlines. Mining Bitcoin isn't free. It requires energy, hardware, infrastructure, and competition. The cost to produce a Bitcoin acts as a kind of floor for price over the long run. Some analysis suggests that price often correlates with the marginal cost of production. When production becomes more expensive, miners need higher price to justify continuing operations. In recent price rallies, many long-term holders choose not to sell, and fewer Bitcoins move from wallets to exchanges. This reduced selling pressure helps sustain upward momentum. Many see Bitcoin less as a daily currency and more as a store of value, a hedge or alternative to gold. That narrative appeals especially in uncertain economic times. No single factor acts in isolation. They reinforce one another. For example, institutional demand raises sentiment, which attracts more demand, which stresses supply, etc. Before you view Bitcoin as a guaranteed rocket ship, here are some risks to keep in mind. Volatility. Bitcoin's price swings can be extreme. One day's gain can turn into big losses. Regulation. Governments may impose rules, bans, or taxation changes that affect adoption or demand. Competition. Other cryptocurrencies and technologies could challenge Bitcoin's dominance. Technical security risks. While blockchain is secure, human errors, wallet hacks, private key loss happen. No intrinsic backing. Bitcoin isn't backed by a government, commodity, or cash flow. Its value relies entirely on trust, adoption, and belief. Some critics argue it has no intrinsic value. Even with these risks, many believe the upside potential justifies exploring it. But it's important to proceed carefully. So, why does this matter for you? Because Bitcoin has become a flagship asset in the new digital finance era. Its price action often influences the broader crypto markets. By understanding what drives Bitcoin's price, supply scarcity, demand, institutional interest, macro factors, and sentiment, you'll be better equipped to navigate the crypto space. In future videos, we'll dive into related topics. How Bitcoin compares versus altcoins, e.g., Ethereum, Solana, what to watch ahead, halving cycles, institutional flows, regulation, technical analysis and charts, and much more. If you found this video helpful, hit that like button, subscribe, and turn on the bell so you don't miss what's next. Drop a comment below. What crypto topics should we cover next? Thanks for watching Crypto Insights. See you in the next video, where we dig deeper into the crypto world.